Yes, legends. Bitcoin has confirmed the deviation of the QSR level, $20,000, guys. Bitcoin has confirmed the deviation play. Now, guys, what's going to happen next? How can you trade this? What can you do? I'm going to tell you in this video. Let's go. Guys, we're coming back to this ascending formation trend line here. This is an ascending trend line, very, very simply put. We have the market price coming up and making every single time a higher low, with $20,000 being the top of the triangle. You can actually see here that we're getting deviations on every single time. Because I said in my previous video that if we do get a deviation play, guys, the next target is going to be this trend line. Here's my hunch, guys. There's a buy on this trend line. And at the moment, we are getting some wick on the hourly time frame. This is actually the 4-hour time frame. So we could get one more attempt at 20K again. If we get above it, we could come back down. Are we going to get the break and then the retest? I'm going to continue going lower, guys. That is what we are waiting to see right now. I do think there's a buy here, guys. At the end of the day, it's a very simple QSR level we've got to get above for the bulls. We've got to get above 20K and hold it on a daily basis to see higher prices coming in. I'll show you those in a second, guys, where it's going to be obviously the next prior highs on the micro trend. And what we're looking for, guys, is Bitcoin going to get above basically 20K. We've been flirting around freaking 20K for literally months. It's the key level in the market. It's the previous all-time high of the previous bull market. It's perfect. It makes sense. Everything's perfectly technical there. It's textbook. And at the moment, guys, we're waiting to see if we can get it. We got the deviation, like I said in my previous video. And if we do break down below this trend, come up and see it as resistance, then you have a logical trade to be made there in terms of a short for the break. As of right now, then potentially is a buy, because we've hit this trend line multiple times now. The more times you hit a trend, the more likely it is to break. So, it gets less and less significant as we go and hit it more and more times. So if we come up here, guys, now, let's say this scenario happens now, okay? We come up and then actually we get a lower high and we actually don't even get above 20. We come back down. I think it's very likely we're going to break this trend line with another attempt. 5 hits, the hammer hitting it 5 times is very likely it's going to break, okay? So if we get one more little rally now, we get a lower high and then a break. Well, I think basically the probability is that it will break. And if we do get a break, guys, then you're looking for, in a trading basis, you're waiting for a break and then you're waiting for the range lows to get tagged and then the retest. And if it can't get above the retest, guys, we're going to very likely go lower, tag the range lows, potentially even go down to 18, 17, and $14,000 of those bottom side targets. And so let's just go through targets, guys. In terms of the upside, I do think that around the prime micro high is going to get tagged, so 22K, 22,700 around here. If we get above 20, I do think that's when we hit our first next resistance. In terms of downside targets, guys, if we break here, I think we're looking at, on my chart, which I've got it all plotted out for you, Legendays, we're looking around, 17.5 and then 14K, guys. And I've said from the beginning, if someone put a gun to my head and said you have to be in a position, I'll just tell them I'm hedged long and I have spot USDT. That's where you got to be, guys. We're in a bear market. It could last a lot longer. I'll go into the medium term in a second, but I'm hedged long still. I am buying this area, but a break of trend, we're looking at lower prices. Then, guys, going on to that medium term play, we're also going to look at the long to short ratio as well, because it is quite interesting right now. We do look back to 50-50 is a good sign. What we really want to see, guys, on the long to short ratio is there be more shorts at the bottom. We're not there yet, but it is a good sign. And I do think the long to short ratio as a whole will be less relevant in a bottoming out phase, okay? Because we're going to get it's going to be a lot of uncertain traders coming into the market at this point anyway. But overall, you guys know my narrative. If everyone's shorting the bottom, it's usually the bottom. If everyone's long in the top, it's usually the top. So we want to see this overall get more short for it to be a bottom. If you're playing the long card and you want the next bull market to start, if you're waiting for that next bull market rally, we have to wait until the shorts are taking over the longs. I'll quickly just flip into this, but we haven't got a report out right now, guys, but a commitment to traders. I'm not really expecting, guys, on the commitment to traders, the CME, I'm not expecting these guys to take away all their shorts tomorrow. They're going to be coming in and out slowly from their exposure. So I would likely say it's probably going to be the same amount of short exposure or a little bit less. It's less likely they're going to keep increasing. Just more and more shorts at this level. So I'd say if they are, it's either going to be on par or a little bit less shorts from the CME dealers. And another thing, guys, we want to see the dealers long at the freaking bottom. We want to see asset managers increasing shorts, okay? So really interesting, guys, lots of stuff. And then on the medium term, I'll say it again, but, that's what we got to do in these bear markets. Just go through, regimentedly or almost like hypnotizing yourself into your routine in trading. That's the best way to do it. Have your strategy, have your process, have your routine, and keep going through it. Medium term, guys, everything looks the same as I said in the last video. 28K caps the upside, 14K caps the downside. I don't see Bitcoin trading above 28K anytime soon, nor going below 14K anytime soon. I think it's going to be between those two price points. They are the logical two big key SR levels. We're looking at the prior consolidation, and then obviously 14K was from we had that bear market rally back in 2019 or 20. That was. So guys, I don't think we're gonna get up 20K anytime, 28K anytime soon. I think we ping pong in between it. I do see a bear market rally. You know, I could, you know, if we get above 20K, I can see this coming up here, back down, find support, you know, all the way up here, then, you know, oh, here we fucking go again, and you know, all that crap. I do see a bear market rally. You know, we have got clues coming from other markets. You know, SPX had a pretty good go, and then it had obviously a bad day. We can see that we lost the bounce we saw from the prior lows down here. And SPX is, I'm not expecting SPX to curve over anytime, like really quickly. I'm not expecting the next couple of days it just to flush down. It'd be more likely to see it come up a little bit more, maybe back down again, a little bit more. And I think we could spend maybe a month or so around where we are now on SPX. And then if SPX does break down, I think it's very, very likely Bitcoin goes with it. We go to 14K. If SPX breaks up, I actually do think it's quite likely that Bitcoin has a bear market rally similar to what the SPX would do. And that I'd call that a bear market rally as well in itself. So there is a lot hanging on this, guys, because traditional markets are almost leading the world markets right now, especially the SP 500. You know, we know that through Dixie. We know dollar strength is rising. A lot of people are talking about, you know, the parabola I've been speaking about on this channel for a long time. You know, you can call it a parabola, but parabolas, I don't really go on terms of... Parabolas are a little bit more difficult to really know where the inflection point is for the breakdown or break up, depending on which direction it's going. So I like to keep it trend lines. I like to keep it horizontals. And right now, guys, we are coming up against resistance on the Dixie. And I would say that what you're really looking for on the Dixie for a top would be just it to break the structure. So it's making higher lows and higher highs, guys. You can see it very clearly. As soon as Dixie makes a lower high and then a lower high and a lower low. So let's say here, guys, this is a really, really good example actually for all of you guys trading right now. You can see it's literally just doing the ping pong. It's high, you know, it's every single time it's a higher low with a higher low with a higher high. Okay, so if we now don't get above the high, let's say this, we come up, we get a lower high, then we break down, okay, and then we get a lower low. Guess what? It can still go, but guess what? The probability is maybe we're coming to a top. Okay, and then Dixie, if Dixie tops out, then we know that it means people are going to be buying things with dollars. When the Dixie is rising in strength, it means people are selling into dollars. And when we see the Dixie index go down, it means people are buying shit in money markets, especially, okay? So that's what we're looking for from the Dixie. And then that kind of goes into Great British Pound and etc. But we've been through this a million times. We know that a lot of the liquidity sloshing around in other fiat currencies is going into the dollar because the dollar is seen as a safe haven. But we've spoken about that many times, and it doesn't really change the narrative of crypto right now. The Great British Pound falling doesn't mean anything when it comes to crypto, okay? It's a fucking tiny relic of an old fiat currency, which used to be something I've been saying for years, and it's going to be $1 to £1. For more than 3 or 4 years, I've been saying that, guys, and people call me fucking crazy. And you can ask, literally, you don't know my friends and my family, but if you did ask them, they're all ringing me up saying, fucking hell, mate, can't believe it. Absolutely can't believe what's happening to the UK, especially with the bond market, the economy, etc., etc. I don't fucking live there, though, so I'm surviving. But yeah, so that's it. That's in terms of that side of it. And that narrative there with the Dixie is what we're really looking at for crypto. And right as of now, we're just going to play it day by day, hour by hour. You know, the indicators have been absolutely phenomenal as well, guys. You know, these short-term scalping indicators, you know, this is a phenomenal move up, phenomenal move down. It's catching everything pretty much on the lower time frames with the indicators, guys. You can get those from mdxalgo.com. mdxalgo.com is literally where that you can use it as a hub for crypto in terms of getting all your information. And if you click trade, guys, you can actually sign up with our partners, and our partners will give you literally thousands of dollars completely for free, guys. So those links to the partners will be in the description box below as well. And let's go long term real quick. In terms of CBBI, couldn't be a better time to be buying Bitcoin, guys, on the long term. It's really simple as that. If you buy Bitcoin today as a long-term investor, it is very, very unlikely you're going to be unhappy in a couple of years or even a year. Very, very unlikely as an investor you're going to lose buying Bitcoin at these types of levels. You know, looking at the history, all you really have to do, guys, is look at the history of Bitcoin on the monthly, and you can see very clearly that every single time it makes a high, it's been breaking with a deviation play. Every halvening you see here, after our halvening, it's had an exponential expansion in terms of its price. You can see here that the prior high from the previous bull market is now acting as support for the next bear market. Looks good to me. So it's respecting, and it's doing very classical chart patterns. and that's to be, you know, why wouldn't it? It's a perfectly organic market with high liquidity. It's traded 24/7. There is manipulation, but these players can't manipulate stuff on the higher time frames. And human beings haven't changed, and it's an asset which is going to trade very similar to gold. So I wouldn't see. I think Bitcoin will trade more and more beautifully, to be honest, and more textbook if that makes any sense. Just because of its purity and what it is, you know, there's not really a huge. There is derivatives, but the derivative market on Bitcoin, you can't actually create more derivatives or IOs than actually there is the Bitcoin, because it's, you know, 1-to-1 Bitcoin. There is 21 million Bitcoin. That is it. 100% fucking. There is full transparency to that. There's not full transparency with even gold in terms of its derivatives market. So 1-to-1 sovereignly hold liquid fucking gold. Beautiful on the internet. So yeah, anyway, that's a long-term prospect, and you can see here on this chart, guys, it's quite simple. You know, it used to be overbought, now it's oversold, and we are actually at price points which were seen, you know, 4 years ago as Bitcoin would never go to 20,000. Now it's like Bitcoin would never go down to 20,000. So absolutely great to see these logical long-term patterns playing out. One more thing I want to add, guys, is PalmSwap. The exchange will be going live soon, guys. I will personally be using this exchange to hedge in crypto. It's a decentralized perpetual swap contract platform with 10x leverage. Really cool, really easy to use, kind of like Bybit vibes, but decentralized. And I'm going to do a competition as well right now. So just to say one thing as well, guys, go to their website, PalmSwap. There will be a link in the description. And if you do want to trade on this exchange, the link, which will be in the description, will give you 10% off trading fees within the platform. So that's all great. You can save on those fees. Even though the fees are good, 10% still even freaking better off. But this exchange, guys, as well, we'll do a competition. I want you to write in the description below, do you think decentralized exchanges are going to beat centralized exchanges in the future, and which one do you think is going to do it the best? The best comment below, guys, with the best answer, I will literally send you $100 worth of Bitcoin, and I'll give you MDX Algo for free for life. Okay, so comment below, guys, get into that competition. I'll post that on Twitter as well, guys. You're all legends. I'll see you on the flippers. Here we literally